hope everything's going okay. Welcome to the new week. For this new week, we're going to be focused on the role of production cost and perfect competition. You'll notice that production costs are very important to a firm and how they make decisions on their business. There's going to be various types of production costs that we're going to look at, and it's very important to apply those production costs in your analysis. So a couple of the key terms are fixed costs, which are costs that do not change when output fluctuates. Variable costs, which are costs that do change when output changes. Marginal cost is the change in total cost. And total cost. Those are the key terms that you want to look at. You'll notice that many of the decisions in economics are based on the margin. And what I mean about the margin is most of the decisions are based off of each additional unit that's produced. So that's what we're evaluating with those. When we look at this week, you'll find that we're focused on one key market structure, and the key market structure is perfect competition. Perfect competition is characterized as a market structure that has many sellers selling identical products. And given that they're selling identical products, it's very hard for them to differentiate their products. So what you're going to notice is they will struggle to be able to identify the best way to raise prices, because if they raise a price, other people can supply that good at the lower price because they have to take the market price in the good of the particular product. That's the key point that you want to focus on when you look at perfect competition. Perfect competition has many buyers and sellers selling identical products with very relatively low barriers to entry and exit. A good example of perfect competition would be looking at the agriculture market. And what you do when you look at the agriculture market is when you throw, let's say you're seeing these firms make profits. So when you see these firms make profits, someone could just go in very easily, throw some seeds down and make some money in this market structure. But what happens is if people are making profits, more people will enter the market, pushes down the price, and then the profits disappear. And the opposite thing occurs. If people are earning losses in this market, you're going to see that people will actually leave, which will cause higher prices. So for this week, you're going to have discussion forum and quiz. Make sure in the discussion forum that you're focused on having your first post completed by Wednesday. Your in-text citation includes both your initial post includes both your in-text citation and reference page, both in APA format. That's very important to focus on. And that you're addressing each question that we're looking at. And then you need to have 2 peer responses. And your peer responses can be any response to my questions or your peers. But I look forward to your effort this week, and make sure to get that work in by Sunday night.